Peter, you are responsible for sourcing, executing investments in India, South Asia as well. Where are you seeing good opportunities right now?
The opportunity in Asia generally, and India in particular, is in the SME sector, the small and medium enterprises. As everyone knows, they contribute a significant percentage of GDP. In India, it's as much as 40% and maybe rising to 50%. These SMEs don't find financing from traditional financing sector. And more importantly, going forward, they will need financing from nimble, flexible capital providers to take advantage of the significant changes that are happening in the marketplace today. And that is where ADM Capital and private credit comes in. And we've done financing already in the space over the last 20 years in India.
So, and in terms of numbers, how much credit did you deploy in India and elsewhere in the region last year compared to years prior?
So over the last few years, the opportunity in India has been significant, and we have deployed over 230 million in this space, both in terms of new companies, as well as new opportunities, as well as follow-on opportunities with existing companies as they seek to grow their asset base. And it has been pretty diverse in different sectors as well.
So how are some of the challenges, though, in India when you're looking at secured lending?
So while on the one hand, opportunities are immense, there are challenges as well, particularly in terms of the idiosyncratic nature, not only of sectors, but also of investing in different regions. More importantly, in the last several years, with the macro situation being the way it has been, as well as the depth and diversity of sectors, I think what's important with the rising interest rate scenario over the world and in India as well is that we need to be very cognizant that there is an impact on individual companies, which could work very differently for different companies and sectors. So the ability to be very selective, do our homework, and do the due diligence required to support those companies that will survive and grow in this kind of environment is important.
You've also got to focus on smart cities, urbanization. However, India has a somewhat creaking electricity grid. Load shedding is quite common, particularly in the brutal summer that India has just endured. How does this impact your spending and the way the people you lend to are able to develop?
Yes, and this actually counts even more towards what is the need of the hour, which is, as you rightly said, Paul, the need of the hour is to spend on making cities smarter. It's not necessarily only electricity, which is going to be really the need of the hour, but in various other kinds of infrastructure. When it comes to ADM Capital and the way we look at the SME universe, the way we would like to look at smart cities is by looking at the supply chain of infrastructure companies and helping those SMEs in the supply chain of these various infrastructure sectors to grow their business to meet demand. At the same time, focusing on a combination of technology and sustainability in order to make cities more efficient, more smart, more sustainable to encounter the challenges of the longer term.
We also launched an Indonesia-focused fund last year. It's got an ESG focus as well. I know you can't disclose performance, but can you give us a sense of how satisfied you are with the performance and some detail on the investments that have been made?
The fund in Indonesia is actually looking at an impactful sector, whereas what we are doing in India at the moment is what we call ESG integrated investments. In other words, ADM Capital as a fund and as a company is very focused on improving the ESG capability and in ESG aspects of our transaction and all our transactions. And within India, we have focused on companies that we have helped in improving incrementally their environment, social, and governance aspects, both in terms of improving, for instance, gender ratios in companies, or being even able to accommodate the risks of the severe climatic changes that we are seeing in the marketplace today, whether you're talking of Indonesia or India or anywhere else in Asia. So I would say we're pretty satisfied.
How do you balance how do you find a balance between those impact metrics and financial metrics?
Very interesting aspect to consider. The way we look at impact metrics and the way we encourage our companies, more importantly, to look at impact metrics is that if they are not being met, they are a risk to the company's own financial future. If you talk of climate risks and carbon risks and environmental risks, we are seeing all across the region. We're talking of the heat wave in India, for instance. We were talking of flooding a while earlier. All that can impact the financials of companies. And therefore, to look at it as a risk is very much supposedly a part of our underwriting due diligence. The other aspect is that of social indicators. A more diversified gender balance definitely helps towards rounded growth and more fair growth for companies that they can sustain in future. And so the long story short is that it should not really affect returns when we're seeking impact from these factors.